Hello everyone, welcome back to this week's Technical Insights. Last week, the US market had a massive rally. The US benchmark indices closed at an all-time high on Friday, posting strong weekly gains as Donald Trump won the 2024 US presidential election. Trump defeated Vice President Kamala Harris in last Tuesday's polls, marking his return to the White House. On Thursday, the US Fed lowered its benchmark lending rate by the widely expected 25 basis points following the 50 basis point cut in September. Then, the US 2-year yield rose 3.4 basis points to 4.25% on Friday, while the 10-year rate dropped 3.7 basis points to 4.31%. The Dow Jones Industrial Average then rose 259 points or 0.59% to close Friday at 43,988 points. The blue chip average actually traded above the 44,000 mark for the first time ever during the Friday's trading session. The S&P 500 meanwhile gained 22 points or 0.38% to close at 5,995 points after briefly trading above the 6,000 point mark for its own record. The tech-heavy Nasdaq Composite Index lagged slightly among the three US indices, up just 17 points or 0.09% to close at 19,286 points, but also set an intraday record high as well. For the week, the Dow Jones Index actually rose 4.61%, while the S&P 500 gained 4.66%. The Nasdaq Composite also jumped 5.74% for the week. All three major US averages finished the week on their record closing levels. US equities are eager to price in Donald Trump's domestic growth policy via the small cap stocks and hopes for easier regulation relative to the Biden administration. But whether these moves are sustainable remains to be seen, and the momentum is extending the lofty gains after the sharp post-election jump, which pushed the major US average into their technical overbought levels. Investors view a Republican-controlled government as more favorable for deregulation, increasing the potential for more M&A deals and proposed corporate tax cut. However, the concerns over large federal deficit and the increased tariff have also sparked fears of an uptick in inflation, resulting in possible delays of the rate cuts. Stocks associated with Donald Trump performed exceptionally well. Tesla, whose CEO Elon Musk campaigned with the president-elect, rose 8.2% and was on track for its fourth straight winning session on Friday. The EV maker market cap surpassed the 1 trillion mark, and Trump media also jumped 15% after the president-elect said he had no plan to sell his shares in the social media company. In Asia, Hong Kong stocks ended the week slightly lower amid concerns over renewed tensions between the US and China as President-elect Donald Trump prepared to start his second term. The Hang Seng Index fell by 1.07% or 225 points to close Friday's session at 20,728 points, while the Hang Seng Tech Index declined by 0.2% or 9 points to close at 4,668 points. Trump return to the White House could result in tariffs on Chinese export as high as 60%, which could inflict a heavy blow to the Chinese economy and further strain the relationship between the world's two largest economies. This will also introduce more complexity for China's policy making, and Beijing will need to intensify their support measures next year if a renewed trade war occurs. This development actually overshadowed Hong Kong Monetary Authority's 25 basis point reduction of its base lending rate to 5% from 5.25%, which was in lockstep with the US Federal Reserve. Back in Singapore, our STI index continued the rally on Friday, hitting a 17-year high. Our benchmark index actually rose 1.39% or 50 points to close at 3,724 points. For the week, the STI is up a massive 168 points or 4.75%. And year-to-date, our STI is now up close to 15%. Our three local banks also hit record highs on Friday, carrying the benchmark index higher, with UOB being the top gainer on the STI index. UOB actually closed up 7.18% or $2.39 to $35.69, while DBS rose 1.68% or 70 cents to $42.40. OCBC was also up 1.13% or 18 cents to $16.06. The top loser on the STI index was Genting Singapore, down 6 cents or 5 cents to 79 cents on Friday. So for this week's technical analysis, let's look at the top gainer on the STI, UOB Bank. Last Friday, UOB share price actually rose $2.39 or 7.18% to close at $35.69. For the week, their share price rose a total of $3.59 or 11.18% for the first winning week in 3. UOB reported their results last Friday, and its net profit rose 11% year-on-year in Q3 to Sing dollars 1.61 billion from 1.38 billion for the same period a year ago, sending the UOB share price up more than 7% at the market close. This is the best quarterly net profit showing ever, beating market expectation thanks to record trading and investment income. Looking at the chart of UOB, UOB share price has been largely on an uptrend this year. The previous year-to-date high was seen in September at $33.38 over here, which is a double top formation with the high in July as well at $33.33. This double top resistance could now become a support level for UOB share price going forward with a change in polarity. The next support level would then be the green line that you see here, which is the 20 days moving average, now at $32.54, which I believe would likely trend up further to find confluence with the $33.38 level, giving more support level to the resistance turn support level going forward. Looking at the indicators, the MACD now has a very strong positive reading, indicating the presence of a very strong uptrend momentum. But the RSI has overshot the 70-point mark, meaning we are now into the overbought level at the 81-point mark. The previous time we saw UOB RSI hit the 80-point mark was somewhere in the July period over here. And subsequently, in the next month, you can see that UOB share price actually fell 12% in the August period. So history does not really repeat itself, but usually rhymes. And the long candle wick formation on last Friday trading suggests that UOB share price is slightly overbought for now and could be due for a pullback. So with both the MACD indicator and the RSI contradicting each other, traders and investors chasing this rally of UOB would need to be very careful. It would be more prudent to wait for a pullback towards the $33.38 level, which is the resistance turn support level, before loading up on UOB again, targeting the latest year-to-date high at $36.60. And these are the updates that I have for you this week. I hope you find the information useful, and do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.